Hey, this is Joel Olson coming at you with a variable rate update on where things are at as far as your variable rate mortgage goes. January 25th, which is this coming week on Wednesday, is the Bank of Canada meeting. You know, really, since our last time that we had a Bank of Canada meeting, we've really had two trains of thought that has remained to be the same. The first one being a 0.25% increase, and then that would stop rates altogether, or two, no rate increase at all. That remains to be the only two predictions on the market. A quarter percent increase, and then stopping rate hikes altogether, or no rate hikes at all. Now, to be clear, no matter what anybody says, no matter what you read, there's no justification for a rate hike. Inflation has considerably slowed, but it still remains higher than anticipated from their perspective. And secondly, the important thing to remember why this means this doesn't justify a rate hike is that rate changes take time to have an effect on the economy. Most of the relief in inflation has been a result that up until rate hike started, 90% of all inflation concerns were assumed to be as a result of supply chain issues. So issues that were not related to things that interest rates could fix. And so those have eased over the past 12 months, but rate hikes, with the exception of the housing market, has not yet kind of like worked its way into the market. And so the damage to some degree has already been done. So be sure on this that rate hikes are not further justified. Secondly, one thing they're leaning off of, I did a video a couple weeks ago on this, because I think this is important, is a strong jobs report. And you'll see that I did in the video, I went into a whole bunch of reasons why that doesn't actually mean the economy is strong at all. In fact, it could mean quite the contrary, to be quite honest with you. And so I think that, those are the only predictions. Now, the thing I want to zero in, so that's where things are going. We'll have another video next week. That is what it is. The thing that I just still irks me a little bit that I think is really important is that this is a sober reality, but you have two ways of making decisions right now when it comes to interest rates. First of all, and I've done other videos on this, and so this is a little bit of redundancy, but I think this is the thing that I really feel when I get on the phone with clients that they're not understanding and they're having a hard time with. If I believe that rate hikes are short term, if I believe that interest rates are higher over the short term, then I make a decision based on how can I short term, and I mean 1 to 2 years, afford the higher payments. That may mean taking on other income sources. That may mean relief. That may mean changing my mortgage around. It can mean a number of things. I'm challenging things for a short term. However, if I believe that rates are higher, remembering that even though it seems crazy, 5-6% is historically very average. So that's what rates really were for a long time, around that range. So if I believe that's where rates are, all these calls I get, should I lock in? Who cares? Because that means that like eventually you're going to have that rate. You're just kicking it down the road. You are kicking it down the road on when rate hikes can happen. So you have to look at your budget and say, can I afford this payment? Now, what would I be looking at? Am I willing to house hack? House hack means renting out rooms or other income. And am I willing to do that long term? Do I have a wage increase on the horizon? Do I have a significant change in my expenses or income? These are all things I have to consider. And if not, something you really could consider at this point, and I know this could be a little disheartening for people, you could consider downsizing at this point and think, well, maybe we have too much house, and you might say, well, gee, the market is slow. When you're moving houses and you're going, when a market is slower and you're not getting as much as you hoped you would get, remember, like the market is slow way around. So you're just transferring equity. So that could be a real consideration if you think that interest rates are going to be around that effect. Maybe you want to take this opportunity in the market to downsize a little bit lower, and that gives you some leeway that way. If we haven't had a conversation, or we haven't had one recently, let's get on the phone, because I don't want people just taking this advice as being their advice, because your advice is unique to your situation. Thank you so much for listening, and if you can share this with a friend and take the time to subscribe to our channel, we'd really, really appreciate that. Have a great day. We'll talk to you soon.